a First on CNBC interview with Casey's CEO, Darren Rebelez. Thank you very much, Darren, for joining us. It's good to talk to you. Where do you think the consumer is right now?
Well, thanks, Sarah, and great to be with you again. What we're seeing is the consumer has been fairly resilient so far this year. We are seeing a little bit of bifurcation between the lower income consumers and everybody else. But in our footprint, about 3/4 of our guest base make over $50,000 a year. And in our more rural geography, that's a pretty substantial income. And so those consumers are doing just great. And we had great momentum in the quarter from a sales perspective. We are seeing a little bit of pressure on the lower income consumers, but they're not stopping spending. What they're doing is shifting around to more affordable options like our prepared foods and like our private label products.
I mentioned the fuel margins. That seemed to be the good surprise in the quarter. Why so much better than expected, and where do we go from here?
Yeah, the fuel margins hung in there really well. And I got to give a shout out to our fuel team because they executed in a challenging and somewhat of a challenging environment really well. But what I would say is that over the last couple of years, fuel margins have been really volatile, and there's been a lot of exogenous reasons for that. But this quarter was a little bit more ratable from a supply standpoint. And so the way we look at fuel margins moving forward is that these margins at more elevated than historic margin levels, I think, are a reflection of what's going to be happening in the future. I think they are more sustainable at these higher levels. And a lot of that has to do with the fragmentation of our industry. 2/3 of the convenience store industry are operated by chains of 10 stores or less. And so when you think about the inflationary environment we've been in through the last couple of years, it puts a lot of pressure on those smaller operators, and they have to raise fuel prices and extract more margin just simply to survive. And so in that environment, that works really to our favor, and we're seeing that play through on a lot of different fronts in our business.
So how would you characterize or describe the pricing strategy going in to Q4 and early next year, ex-gas?
Well, from a pricing standpoint, we look at category by category, and our merchants spend a lot of time trying to position our pricing relative to our competition based on what that category is. So in some categories, we want to be very aggressive and we want to drive traffic for those categories. And so we'll price it accordingly. In other categories, maybe we don't have that focus and we're more looking to gain margin and grow gross profit dollars. And so we strike a balance across the assortment, and it all blends into pretty good margins for us. And frankly, we've got some of the best inside margins in the industry as a result of that approach.
So how big can you get? Your stores are mostly right in the middle of the country, Midwest, right? Ohio, Indiana, Illinois. How big are your ambitions when it comes to expanding?
Well, we can grow a lot, Sarah. And just a quick data point: we have 2,500 stores in 16 states, but 2,000 of those stores are in only 9 states that we operate in. So we have a lot of white space just in our existing geography. But there are small towns and rural communities across the U.S., obviously. And so with only 17 states penetrated at this, or 16 states rather penetrated at this point, we still have a long, long runway for growth.
How discretionary is convenience store spending, Darren? What happens typically in recession? Because gas you need, but those extra little treats that people buy, I don't know.
Yeah, actually, Sarah, we perform really well in recessionary environments. And one of the things that really helps our business model is that we sell basic needs. So 80% of what we sell is consumed within minutes of purchase, and really highlighted by our prepared foods business. And so when you think of more discretionary retail, it's easy to give up maybe not buying that new television set or that couple $100 pair of jeans. But when you're talking about your delicious breakfast pizza and a cup of coffee every morning, or your energy drink to get you through the day, those are low dollar purchases and really make you feel better about getting through the day. And so we find that the categories we play in are very resilient in recessionary times.